Okay, that's the word coming in from Manish Sabharwal from Team Lease on the trends that he's seeing across the job losses playing out in the country. Back to earnings very quickly. Let's welcome on board Shailendra Chouksey, the whole-time director at Lakshmi Cement, joining in at the show right now. Mr. Chouksey, good to have you. Tell us a little bit about the volume offtake that you saw in the quarter gone by. What was the capacity utilization levels that you're currently sitting at, and whether or not there's been a significant offtake issues which persisted as per the channel checks that are throwing up at us?
Well, the quarter the quarter gone by, we have seen a decline in our volume by close to 17%. And if you see the trend that we've been witnessing right from the first quarter this year, there has been a declining trend in the cement consumption, the industry as such I'm talking about. And the fourth quarter we were expecting, because it being the last quarter, would be very good, but somehow it did not pick up. And in the last month of the quarter, of course, with the 12-day of shutdown, Rajasthan we closed on 20th of March. So practically 11 to 12 days gone. So about 11% lost in that particular quarter. So we have seen in this quarter volume going down by 17% as far as our production is concerned, and about 16% as far as our sales volume are concerned. Year as a whole, of course, the situation was not that bad. We saw a decline of about 5% in sales and about 7% in our production.
There's been a complete standstill in construction activity, challenges when it comes to labor, transport. Have things eased at all in the last 15 days with the partial opening in some states?
You see, as far as the lockdown is concerned, the entire last 12 days of March and almost first 20 days of April was totally standstill. We started some of our grinding units from about 21st to 25th of April, various units we started. And then the mother unit at Surohi, Udaipur and Durg, we started in the first week of May on different dates. Today, of course, we are running all the units. But the ramp up has been very gradual. You are very right. There has been supply chain issues. First, the trucks which were already standard, we had close to about 90,000 ton material on the road when the lockdown started. So therefore, first to get back all that material, get a control over it, was a Herculean task. But fortunately, everything got tied up. And now we are currently moving at about, on an average, about 65% of the capacity utilization. That is what we are able to do right now. But I think sustenance of this quantity going forward would be again a very big challenge. As you very rightly said, that the construction of the bigger ticket, for instance, the infra or the real estate, that hasn't yet started in a big way. What we are seeing is, number one, the supply chain was totally dry, which we have been able to fill it up. Secondly, the smaller constructions, which were midway when the lockdown started, they are in a hurry to, they were in a hurry, in fact, to complete their project. So some that also contributed. But now, as things are stabilizing, the labor shortage, the big absence of the big ticket construction, all that is going to hit us gradually, and we may see coming down of this capacity utilization.
What is the current capacity utilization then, or the trends, the kind of demand, especially given that infra and realty continues to be more or less at a standstill?
You see, currently, let me answer your last question first. Currently, we are witnessing construction going on mainly in the rural area. For one, rural was not that badly hit with the COVID-19. It was more of urban and then gradually semi-urban. But that is not to say, or I believe that this will not spread there. Now, as the more and more number of migrant laborers are going back, the number of cases even in the rural areas and the villages will gradually increase. That's my assumption. And gradually even that construction might get affected. So that's a very big challenge that we see going forward. And of course, sustenance of the construction activities, what we have seen in last about 20 days, would gradually become a challenge. Number one, in the bigger centers, the labor going back, so there'll be a shortage of labor. And in the villages where they go back, the chances of the cases multiplying will become more. But then there are some positives. The stimulus package which have resulted in direct benefit to especially to the agriculture front, the farmers, the Manrega outlay, the direct benefit of direct transfer of the ration and so on, that will benefit the labor which has gone back, and therefore they can utilize their time while being in the village in construction of their own homes, especially under PM Awas Yojana. So to my mind, that will pick up, and gradually that is where some demand will come. But whether it will be big enough to sustain the entire shortfall, that's a big question, very big uncertainty right now.
Huge cry amongst players that cement companies are resorting to cartelisation. They're taking advantage or unfair advantage of the demand and the supply shortage. How would you respond to that?
In an industry which is so fragmented like Indian cement industry, at the very outset, I somehow can never understand where does this issue of cartelisation comes. What happens in cement typically, the prices are very volatile. As a result, when the prices come down, nobody raises an eyelid. The moment you try to correct the price, you see the supply chain has become expensive. The drivers was not there. You don't get trucks for the place where you want to move. Obviously, you have to pay a higher freight. Therefore, it resulted in higher landed cost to the dealer. Even before we could start that supply, when the supply chain became dry, the retail price went up because of the shortage of material temporarily. So therefore, it probably got into a feeling that the manufacturers have increased the price. The area that we operated, for instance, in East, if I take Chhattisgarh, if I take Odisha, if I take the eastern part of Maharashtra and Madhya Pradesh, we have hardly seen price going up by 5 to 10 rupees, which is not even 3 to 4% of the pre-lockdown price. Therefore, these talks of cartelisation or a substantial price hike, it actually goes above my head, because we are not witnessing any such price increase. In fact, what is happening is with that the reduced capacity utilization, almost 25 to 30% reduction, the fixed costs which have gone up, the current prices that whatever we are selling is practically a cash loss. But still we are sustaining as we got to maintain our business, because we are in any case constrained to pay wages to our labor. We are continuing to pay the wages and the salary. We continue to pay the electricity full charges, the fixed demand charges, and so on. Therefore, with no reduction in the fixed cost, our actual cost of production has gone up many times. We have hardly been able to do a correction of not even to the extent what we are paying extra in the supply chain cost.
Recovery which you are penciling in post the lockdown.
Again, handling your last point first. You see, I expect a W-shaped recovery. I would expect after this initial euphoria, the demand will go down, will gradually ramp up, and as we believe the virus or the disease may come into waves, then we can again see a gradual declining and going up. So it will not be a straight V-shaped recovery. I expect a W-shaped recovery, number one. Number two, in terms of the going forward, what our own reading is, of course, is anybody's guess. Your guess is as good as mine. But what I believe is that in the Q1 and Q2, on an average, I would expect a volume of about 60 to 65% of the normal. So if the normal capacity utilization at which the industry was operating was 68 or 70%, now in these 2 quarters, I don't expect capacity utilization to be more than 54, 55% on an average. Individual unit can do better or worse depending on where they are located. But if I look at it industry as a whole, then my own reading is anywhere around 50 to 55% capacity utilization in Q1, Q2. Q3, Q4, I certainly expect a recovery, as by that time either the medicines would have evolved or we would have learned to live better with the COVID along with us. And then I expect some recovery, which means I would expect 80% or 85% of the normal demand. So that means the capacity utilization can come back to anywhere between 60 to 65% of the industry's capacity. But there's, as I said, it's purely my guess right now.
Sure. Just wanted to understand, Mr. Chouksey, what exactly are you doing with the Chhattisgarh region? As of now, what is the percentage of sales that you get from your Durg plant? How do you see margins in the East region actually panned out in light of the sharp price increases that you undertook? And how much of a price hike in particular have you taken in Chhattisgarh in the fourth quarter?
In the eastern market, there's a very varied market behavior between, say, Bengal and Bihar, Odisha and Chhattisgarh, or eastern MP and eastern Maharashtra. So we are basically operating in these 4 states of Odisha, Chhattisgarh, eastern Maharashtra and MP. Now here we have not been able to take a price hike of more than about 10 to 15 rupees a bag, which I said is not even compensating for the increased supply chain cost. Forget about the increased fixed cost because of the lower volume. But fortunately, the East, because there in Chhattisgarh and Odisha, comparative to the national scenario, the number of COVID cases have been much lesser in terms of percentage of population. And therefore, the volume there has been comparative to north or west, they are much better off. Today, we are operating there at almost 75% capacity utilization as far as our Durg unit or Cuttack grinding unit is concerned. While in north and west of course is very, very low because of the very high cases of Gujarat and Maharashtra. There is hardly any worth to speak of construction activities going on. And obviously they can't because of the number of cases. North is slightly better than the west. So if I combine the north and west, then we are operating at about 60% capacity utilization.
Mr. Chouksey, good to have you on the show. Thank you so much for taking the time out and speaking with us. Solid numbers from JK Lakshmi Cement. Interglobe Aviation, your big winner today, 8% higher right now. Ditto for a Bajaj Auto, a 4% gap up, and it sticks by with that. And Exide and Amara Raja batteries are seeing some renewed buying, about 4% higher a piece for both of them. For the Nifty, though, we continue tempered, lingering around the 9100 mark, and the breath as well continues well in favor of the advances. We'll take a very short break on that note.